My name is Sharice Bailey, representing Aesthetics by P. Brown, and now I will continue with part three of our personal financial management series, and part three is entitled The Financial Marketplace. We have to be familiar with all of these agencies and organizations and be familiar with the services that they provide, and especially with the way they make their money, the fees and other costs that they levy towards their customers. We have banks, savings and loans associations, saving banks, credit unions, and others. Uh, these are the different types of accounts that each of these have recently been authorized by our federal government to maintain for customers. Checkings accounts are also known as demand accounts because it's in a checking account, when you want your money on demand, you can get your money. Uh, Savings accounts are known as time deposits accounts. And usually, when you put your money in a savings, it's going to be there for a while. It's not uh, what is expected to just go and pull out savings except for emergencies. And certain types of savings, you're penalized if you try and take your money out early, such as CDs and other types of instruments. Types of checking accounts: you got your regular checking account, so you have to discuss these things with your bank to ensure that you have the right type of checking account to fit your needs and your family's needs. So regular checking accounts, these are offered by commercial banks. They do not pay interest generally. Interest-bearing checking accounts are usually, uh, an example would be a NOW account or a share draft account or a money market account. These accounts usually require you to maintain a certain balance, like $1,000, and if you go below the balance, then you don't get interest. But if you keep a basic balance or more, don't go below the balance that's required by the bank, you'll be getting paid a small interest fee uh, on a monthly basis for that money, because the banks use that money to loan to other people and they make an even higher interest fee. These sort of accounts, these interest bearing accounts, are offered by banks and S&Ls and credit unions usually. Starting a savings program is very important, as I talked about in the last sessions. You need to, first of all, establish a family emergency fund, and you have to do that over time. So you just start an account, and or use your regular account, but keep a certain balance in there as your emergency fund. And the great thing to do, or probably the best strategy there, is to just start a separate account and put money in it periodically and on a regular basis. When you get extra money, put a little extra until you reach a certain goal. And usually, for the emergency fund, you want to save at least three times the amount of money it would take you, that it takes to maintain your lifestyle and support your family over the next 3 months. So at least 3 months of pay and income, or even more if you want, but a minimum of 3 months. That would give you time to transfer jobs or do anything you need to do in life without having such a huge disruption, and you're still able to pay your bills. Regularly set aside some funds for that and set a goal as to how much you think you need. And all you have to do is use your family budget to figure out how much it takes to run your household every month, and multiply that times 3 months or 6 months or whatever, and there may be a goal for your emergency fund. Choose an instrument that's best suited to help you meet that goal in a timely manner. Finding an interest earned. Finding the interest earned on we have interest calculators. Again, you can go through the Microsoft Office suite and go to Microsoft Excel, new documents, and it has a budget template, and it has more than 100 different types of budgets, and one of those budgets would be an interest budget. You would want to check, be able to determine what your interest is on your savings, as well as what interest is on any debt or bills you may have. And that way you can determine how it's helping or hindering your attaining your financial goals, as it pertains to how much interest you're getting or how much interest you're paying. The two types of interest that are generally used by organizations is simple interest, and that sounds like the one that it's very simple, you can understand it, but in fact it's usually the more expensive. This is interest paid only on the initial amount of money. So if you make a deposit, you get an initial amount of interest, and then you don't get your compounded interest. But the second type of interest is compound interest. This is where you really want to try and get this account so that you, after the first month, you will start drawing interest on interest plus interest on the principal. You want to get that compounded interest. You want to know what is the effective rate of interest, because you have your nominal rates and the name, uh, or the stated rate of interest, which is you may have a 6% APR. That's the name of it. That's the stated rate of it. But then you have an effective rate, and that the annual rate, especially as it pertains to compound interest, you get interest on interest, and you want the annual rate of a loan. That's the best type of loan to get. If you just get the stated rate, then they're going to charge you a lot more, because they charge you the stated rate, which is 6%, for instance, every month. Whereas with the annual rate, you'll pay an APR, an average rate of 6% over the year. Much better for you. Uh, Moving along with that effective rate, to determine that, you want to put the effective rate will equal, I should say, the annual amount of interest earned, the amount of interest, the amount of money, based on the amount of money you have invested. So if the nominal rate is 5%, the stated that is the stated rate of interest, then the effective rate depends upon the frequency of compounding, just as I mentioned earlier. For access to public computers that are equipped with the Microsoft Excel software applications, you just check with your local libraries. Have a great day. Thank you.